Alrighty, what's going on, guys? Edward here, back with another video. And as you guys requested, I'm listening to y'all right here. Recently, I made a post actually, and a poll or whatever you want to call it. I was asking you guys, what do you want me to post next on my channel? You guys requested fair value gaps. So I decided to make this video specifying one type of entry model from ICT. If you have ever traded ICT, or if you've been going through some of his videos and his concepts, you know there are a ton of PD arrays, what he calls PD arrays, or confluencers, or signals, whatever you want to call it. Um, there are a ton of them, right? Now, it's very complex. This is why in overall ICT concepts is very complex, because it has a lot of names and confusing things. So I'm going to go straight to the point. And if you like ICT concepts, I'm going to make it easier here. If you're new or you're thinking about joining ICT concepts, this should be simple and easy to look, okay? And you don't need to focus. There are, according to him, if you go to his YouTube channel, there are like 80 something, 85 or 80, I don't remember exactly, but it's over 80 PD arrays that he has. Okay, and PD arrays, I mean like fair value gap, changing the state of delivery, um, inversion, fair value gaps, all those names, all those wording, there are over 80 of them. You know, you don't need you don't need to know 80 of them. You don't need to use them, all of them. Okay, you just need to focus in just a few. Okay, and stick to that and master them, and then you can actually use them. You can actually start having a very simple strategy when it comes to ICT. Okay, because when you add all of those 80 something PD arrays into your chart, that's when you're going to get very, very, very confused and overwhelmed, and eventually you quit. So anyways, let me explain this simple and easy entry model. Okay, we're going to be using three PD arrays. Okay, if you focus only on three PD arrays, that's literally all you need. You don't need to be focusing on anything else, just these three PD arrays. I probably what I'm going to include here is the time. One thing I did not mention is the time, right? The hour. Everything when it comes to ICT, time is key. So like, for example, entering in Asian session, pretty bad, right? So timing when to look for this type of entries is key. And I'm going to show you here when is the best time to find or to look for these three things. Okay. One of the first things is that you need is a higher time frame fair value gap. Okay. Higher time frame fair value gap. What time frame in a specific? I mean, you could use your 15-minute time frame as your higher time frame, and then go to the 1 minute to find your entry, okay, and your SMT in lower time frame, and change the state of delivery, right? But you need a higher time frame. It could be daily, 4 hour, 1 hour, right, or even 15-minute time frame, right? It could be, you could use the 50-minute time frame as your higher time frame. So it means that you need to spot a 15-minute fair value gap, and then to look for your entry, you need to go into the 1 minute, right? You go from the 50-minute time frame to the 1 minute, and then you need to spot SMT divergence. What is SMT divergence? You need to know that trading ICT, we mainly trade Nasdaq and S&P 500, right? These are two correlated pairs, indices, two correlated indices. They normally move similarly. When they don't move similarly, there's like a crack in the matrix and it forms divergence. I'll explain this in a little bit. So you need to see that. It's key because it's necessary to spot that divergence once the price in lower time frame is tapping your higher time frame fair value gap. You need to spot divergence, and then the next thing you need to spot is a change in the state of delivery. And that's it. You can literally make the entry after the change in the state of delivery is confirmed. You don't need to wait for a retest or anything like that. If you want to just enter right away, you enter. If you want to place a buy limit or sell limit order, I'll explain how you can do it. But this is basically what you need. So let me jump into the chart and show you what I mean. So here in this example, you see this is Nasdaq. I'm on the 1 hour time frame. Okay. We recently see price is pretty much going down, right? It's dropping. Recently, we created a low, a high, lower low. So price is trending down, right? You see that on the way down, we only left one fair value gap right here on the 1 hour. There's only one, right? If you look on an S&P, let me actually clean all of this. If you look on S&P and I zoom in, again, these are two correlated, okay? You need to learn, you need to use this too in combination, okay, for this. So I'm going to mark up the 1 hour fair value gap right here, also on S&P, right? So this is a 1 hour, right? So we have detected our higher time frame PD array, right? Once that is detected, okay, all you have to do is simply wait for price to come into it. Let's see which pair is going to get inside of that fair value gap first. So we're seeing here that now S&P 500 is the first one on getting into that 1 hour, right? Remember, here 1 hour. S&P is the first one getting in. Nasdaq has not get in yet. So when it comes to the 1 hour time frame, I'm going to jump from the 1 hour to the lower time frame. From this one, I would go ideally to the 5. I can go to the 1 minute as one if I wanted to, or I could even go from 1 hour to 15 minute just to see. Sometimes you're going to find a better entry in any of those time frames. So going from, let's say, 4 hour, you can jump directly to the 15 minute or 5 minute or even 1 minute, lower time frame, wherever you find it better, less noisy. That's what I mean. So in this particular scenario, for this type of entry, for this particular entry, this day, spotted the 1 hour, right? 1 hour fair value gap. I went to the 5 minute. I was using the 5 minute and the 15 minute this time. So one thing I want to see, which pair got into the fair value gap first? S&P, right? We're already inside. What is the next step I need to see now? Once we are inside, okay, once we spotted the higher time frame fair value gap, I need to see S&T. I need to spot S&T divergence. So what do we have? Let's see from, see this high, pretty much from here to here. You notice that from this high to this high, look at this. S&P 500 has created a high and Nasdaq has not. Nasdaq is failing to go higher. It's not topping the 1 hour fair value gap yet, right? S&P is topping it, right? So in this particular case, we're having an S&T now. What do we need to see next? Which in my particular case, I remember I used the 15 minute. It's the same basically. It's the lower time frame. So I went from the 1 hour to the 15 minute in this particular case because I liked it better, the structure. So what do I see here? This is the last sweep, right? Buy side liquidity. The change in the state of delivery would be here. I need to see a candle closing below this opening price. That would be the next step, which is the change in the state, right? Now that I have a higher time frame detected, I spotted S&T, I need to see a change in the state of delivery, right? Also, time. What time was this? If you look at the time, it was 7:45. Today, we had news event at 8:30, okay? At 8:30 in the morning. So, look at this. This is 7:45. This is actually still London session. New York session opens at 8. Look at what happens at 8. Boom. 8 in the morning. This is 8 a.m. now. This is New York session. New York session has already opened, okay? The best time to trade Nasdaq and S&P 500 is, at least for me, is from 8 a.m. to around 11:30 or even midday sometimes. But probably using it depending on what you want to do. You want to trade news or you want to trade after the stock exchange opens, which is 9:30. So in this particular case, this day, I made my entry before the news, even before the news. It's early, but it's one. It's not the best, probably not the best time, but it's a good time to enter because you are in New York session, and this is an indice from the U.S. They move better, right, during New York. So what do we have? We do have a change in the state of delivery. If you want to hop in this sell, you can enter already right there. With that closure, stop loss would be here. Take profit either here or you use your Fibonacci standard deviation from the high to the low. You go projections, and like I did, I actually placed it here. So this would be an entry. What I did was when I saw that change in the state of delivery on the 15-minute, look at right here, S&P 500. I went to the 5, and on the 5-minute, I like how I saw. So we had that SMT, right? Only thing I did not like is that in the next few minutes, this is 8. It's 8. It's 10 minutes past 8, right? New York session. At 8:30, we had news. So my entry was early. It was actually before the news. A little risky right there because I could easily get stopped out. Sometimes it's better whenever you have big news event. Sometimes it's better to wait for the news before you enter. You know, but I mean, you can take the risk in this one. That right there, 8:30 news. Price actually came back, tapping that change in the state of delivery again. And you see that we're starting to displace immediately to the downside. If you look simultaneously, S&P 500, it's also most likely going to reach this low. But S&P has been the strongest pair because it was the one that pushed up higher. Nasdaq is failing to push up higher. I don't need Nasdaq to tap that 1 hour. It's not necessary because S&P is already doing it, and I'm seeing SMT, which is key. I hope it makes sense. You see this type of combination, right? Higher time frame fair value gap is being tapped on S&P 500. I spotted SMT divergence, and then I had a change in the state of delivery. And now, which pair should have entered? Could I have entered also on S&P? Yes, you can enter on both if you want. But which one is going to end up displacing faster to the target? Most likely the weaker pair in this case, right? If you're selling, the weaker pair would be the best to enter. The strongest pair, it's going to take a long time to hit this low, right? Technically, this low is this low. Look at how quick Nasdaq reaches that. Look at that. See how quick Nasdaq is going? Look at S&P, how far it is from this low, which is this low right there. You see? Because S&P was the strongest pair. It did end up actually going higher into the fair value gap. Nasdaq did not. So you don't need to wait for Nasdaq to reach this one. It's not necessary. It's not going to reach it. If you have SMT right there, that divergence in there is telling you that there's smart money is very interested in sales right now. So you see that you can this way you can actually trade using this 3PD arrays, paying attention to a higher time frame fair value gap and SMT divergence combining with a change in the state of delivery. Is that simple? Let me see if I can get you another example right quick. Look right here on gold. This is actually gold and this is silver. Okay, yes, you can spot SMT divergence as well on gold and silver. You can use these two commodities right here. So, and we understand probably price is bearish. We see price actually going to the downside. We spotted a bearish fair value gap, which is this one on gold, this one on silver. I'm going to wait for price to start getting inside the fair value gap. Looks like this one is actually going a little higher. But let's see anyways what's going to happen right here. We probably are forming already an SMT right there. So let's go lower time frame. I'm going to go to the 5-minute. And then I'm going to monitor right here. Now, the idea is, since we're tapping this higher time frame, the idea is I want to try to catch this lows. I want to target this lows You can see on S&P 500, want to try to catch those lows. So this is the 1 hour fair value gap. It looks like on the 5 minute time frame, we are already, breaking that thing to the upside. But let's see what we have right here. See, some of these highs, actually, this high coming from here. Price is breaking up highs. I see already prices trying to create lows right here. And you see with these highs are actually going up higher. Let's see what's going to happen in this area. It looks like it's just starting to form something. I need to see more structure. So let's see what's going to happen right here. From this high to this lows, okay, it's going a little lower. I got nothing yet. But look at S&P. Look at it. If you see S&P already. So from this high, I want to see, I think this high was taken already as well. But it's displacing already. We are actually having a change in the state of delivery. Okay. We have the fair value gap. It looks like we have a change in the state of delivery happening on S&P 500, but I'm not getting the SMT I want at the top right now. Okay, there we go. S&P, look at that SMT right here. Nasdaq is taking the high. Notice that that high right there, which is this high, has not been taken on S&P, right? So we are forming SMT. We have SMT at the top. Now let's see if we happen to close below this low. That would be the change in the state of delivery after the SMT. Is very important. If you're not seeing that SMT, then probably you really got nothing yet. You have to see that SMT happening somewhere in this area. So let's see if we happen to have the change in the state of delivery right quick here. All right, let's see. Do we break? It looks like not yet. So price break another high. One more high right there, and you see that S&P has not taken the high. You see, we are forming SMT like this high is this is an entire divergence right there. Nasdaq is creating higher highs. S&P is failing to create, and as a matter of fact, it already showed that change in the state of delivery, right? So let's see what we have. If I happen to have probably a closure candle closing below this low, I could probably take a shot. I can take that as the change in the state. I can actually call this my change in the state if I have a candle closing below that low, and I could probably go selling. Now that I have, there we go. We do have a closure. We do have SMT confirmed, right? S&P has not taken the highs. We already showed an early change in the state of delivery on S&P 500. So it's probably going to go lower as well. And right here in Nasdaq, we could probably take the short on Nasdaq from there as soon as that candle closes. You see, this stop loss would be here, and we're going to be targeting this lows. At least those lows, we don't know if they're probably going to get towards this, but at least I'm going for those lows right there. So let's see what happens on that point. Yeah, so notice that, price does. The market goes down. But it's very important to spot that SMT, right? It will show. You just have to wait, okay? The SMT will come up. If you don't see SMT, then you simply don't take the entry, okay? SMT divergence has to show. If it doesn't show, then you simply don't enter. You have to have everything aligned, okay? The best time also at the hour, okay, is very important. What time are you actually, what time do you like to trade gold and silver? Try to trade it during New York session. If you do this probably on Asian session, probably you're going to have some losses, more losses in there, right? Try to find for these setups in the best time. I personally like Nasdaq and S&P the most. Those are the only ones I use right now to get this type of entry models. Okay, you have to see every single PD array that I just mentioned. Okay, for this entry model to work out. Hope it makes sense. Let me know what you think, guys, in the comment section. Is it complicated? Was it difficult? Let me know if you're actually understanding it or you want to see more of this. So thanks again for watching. Please subscribe if you're new, and I'll see you in the next one. Alrighty, take it easy.